Felix, where are we in the semiconductor cycle right now, considering the supply chain squeeze, the Internet of Things, demand from vehicles and electric vehicles? Why is it that you see this flipping to an oversupply in just a couple of years?
Hi. So basically what we're seeing right now is supply is being constrained up to 2024 because of the lack of new capacity. But going forward, we see the demand from consumer electronic devices, such as smartphones, PCs, and tablets, to be more or less to reach a plateau in the next 4 to 5 years. And coming up to the future devices like augmented or virtual reality, these devices are the volume of these devices are simply too low to make an impact at this point in time. And also to round up on the automotive, as well as the other kinds of demand, the automotive side is not going to grow much in terms of volume. A lot of the growth comes from EVs being more common rather than overall automotive volume growth. So all in all, this contributes to our view that we expect there is going to be a glut sometime in around 2024.
Okay, so you see the demand side of the equation stabilizing, but it does take a very long time to build a new semiconductor plant. What sort of production capacity is on the way? What's happening on the supply side? Okay,
so what we're seeing right now is a lot of these foundries have announced larger capital expenditure budgets in the middle of 2021. So if we look at how the decision making and the construction goes, a lot of these new capacities would take around 2 to 3 years to build and ramp up. So that's why we'll see more of the new capacity in 2024. So by that time, it would be around, we project around 40 to 50% more new capacity compared to the end of 2020 levels. So that's why on the supply side, we are also seeing more of a 2024 time point.
Who will be the most hurt and who will be the most protected?
So in general, I would say TSMC, Taiwan Semiconductor, would be the most protected because it's pursuing more of a premium product, premium pricing, and premium R&D strategy. So there would be very few substitutes in its cutting-edge products like 5 nanometer and 3 and 2 nanometer going forward. Samsung would be somewhat protected, but it is also exposed to its memory side of the business. The worst hit players would be more of China's SMICs, global foundries in the US, and to a slightly lesser extent, United Microelectronics in Taiwan.
And Felix, any thoughts on Apple's valuation now really nearing that $3 trillion mark and what that could mean for some of those supplier names out there across Asia, of course, including TSMC and Samsung Electronics, not to mention SK Hynix, as you mentioned as well?
Well, from the foundry standpoint, the growth of Apple or the growth in contribution from Apple has to come in either a more valuable, an increase in value of the chipsets. For example, the M1 family of chips. So the bigger the chips, the more dollars that you get from Apple in general. But another avenue of growth for TSMC from Apple is whether if Apple releases new categories of products like the AR glasses. So if those glasses come to the market, then TSMC may as well benefit from an increased demand from semiconductor products, particularly in the chipsets.
Obviously been huge investor interest in this space, but I just want to get your thoughts on one particular company you mentioned in your latest note, and that's Global Foundries. Went public in 2021 in October, and since then up about 42%, now valued at about $35 billion. It's got some really well publicized deals, but more broadly, how does that story look to you?
Well, for Global Foundries, from what's been disclosed over the course of over the past 3 to 6 months, it has been reporting under average metrics compared to the competition. So companies like TSMC as well as Taiwan's UMC have been reporting 90 or even 100% utilization rate on its production lines, while global foundries for the same periods have been consistently reporting more than 10% lower utilization rates on its production. So that would draw a lot of doubt concerning how global foundries can improve its utilization and also by extension its margins.